Global stock markets are facing unprecedented turbulence, with the US and Indian markets struggling, while investors are flocking to an unexpected safe haven, Chinese equities. But why are markets plummeting, and what is fueling this new trend? In this video, we'll break down the current market position, the reasons behind the downturn in the US and India, and why Chinese stocks are becoming a tempting alternative. Let's start with the United States, where the stock market is seeing a major sell-off. Over the past few months, the S&P 500 has dropped nearly 9%, shedding over $4 trillion in market value. The culprit? Ongoing trade tensions under former President Donald Trump's administration, particularly with China, are taking their toll on investor sentiment. Trade policies, erratic tariffs, and a potential recession are creating uncertainty. This has led investors to pull back from equities, with many choosing to stay on the sidelines or shift their investments elsewhere. The tech-heavy Nasdaq has also been hit hard, as major tech stocks like Tesla and Alphabet struggle. India, too, isn't immune to these global economic challenges. The Indian stock market has taken a massive hit, with the Nifty 50 down over 14% since last year. Fears of a global slowdown, compounded by domestic economic challenges, are weighing on investor confidence. Indian stocks have been under pressure as concerns over inflation, rising interest rates, and weak consumer demand have dampened growth prospects. Retail investors who heavily invested in Indian equities during the bull run are now facing heavy losses as market valuations tumble. But amid all this uncertainty, one market is bucking the trend: China. Over the past few years, Chinese equities have become an attractive alternative. The Hang Seng Index in Hong Kong has surged 17% since Donald Trump took office, while US stocks have been falling. Chinese tech stocks in particular have seen a remarkable rise, with valuations far cheaper than their American counterparts. Chinese tech stocks are up 29% this year, and with their lower valuations, many investors are looking to them as a growth opportunity. Chinese companies are benefiting from strong government support, a large consumer base, and rapid advancements in technology and infrastructure. This shift towards Chinese equities is signaling a potential change in global investment dynamics. For years, US markets have been the go-to for investors, but now, with trade wars, recession fears, and an unpredictable economic future, many are starting to question whether there's a real alternative. China's economy is still growing, and while challenges remain, its stock market offers better valuations and a higher growth potential compared to the US, with Chinese companies leading in sectors like technology, e-commerce, and green energy. Many believe that this is just the beginning of a major shift in global capital flows. So, what's behind the struggles in the US and Indian markets? In the US, it's the ongoing trade war, policy unpredictability, and fears of an economic slowdown. The stock market, especially in tech, is experiencing a correction after years of soaring valuations. In India, it's a combination of factors: rising inflation, weak consumer demand, and global economic uncertainty that's undermining investor confidence. The market has been reacting to fears that economic growth may slow even further. Looking ahead, the future of global markets remains uncertain. In the US, we could see further volatility if trade tensions persist, or if the economy slips into recession. However, the recent pullback in stocks might also present buying opportunities for long-term investors. For India, economic reforms and a focus on infrastructure development could spark a rebound, but investors need to be cautious as risks remain high. As for China, the country's tech-driven growth and global influence are set to continue, making Chinese stocks a viable long-term alternative to traditional Western markets. In conclusion, the global investment landscape is shifting. As US and Indian markets struggle under the weight of trade wars, inflation, and uncertainty, Chinese equities are emerging as a strong alternative. But with any investment, caution is key. Global markets are volatile, and the future is unpredictable. One thing is clear though: the age-old dominance of US stocks may be challenged, as investors look beyond traditional markets for new growth opportunities. Do you think China will continue to rise as an investment powerhouse, or is this just a temporary trend? Let us know your thoughts in the comments below, and if you enjoyed this breakdown of the global markets, don't forget to like and subscribe for more insights.